Edward Brown, host of The Best of Investing, here to remind you to tune in this week on Saturday at 8 p.m. Our guest is going to be Mark Willis. You're not going to want to miss this show. That's The Best of Investing on Saturday at 8 p.m. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is miscellaneous trivia. I do want to make a mention here for Pacific Private Money's new fund called the Arrival Fund. It's a limited time only. Right now, they're paying 10% backed by first deeds of trust that are fairly short term because they're selling them to institutions. You do have to be an accredited investor, so check them out at pacificprivatemoney.com for more details and let them know you heard about their fund on the Best of Investing radio show. And also their Freedom Fund is paying 10% for 6 months. So again, check them out, pacificprivatemoney.com. Today, we do have a special guest who's been a friend of the show for a number of years, Spencer Scheer, a real estate attorney, to discuss a few things. Spencer, welcome to the Best of Investing.
Oh, thank you. Good to be back.
All right. So let's start off with the new foreclosure laws in California. What's going on there?
All right, first, I got to give the legal mumbo jumbo, and that is that anything I say, although it is good general information, and should spur you to thought and action, can't be relied on for legal advice or investment advice by anybody. You got to consult a lawyer on any particular fact or case issue that you have. So that being said, tons of stuff's gone on. If you're someone that is being foreclosed, if you're someone that is looking to bid at a foreclosure sale, the laws have changed dramatically. It is absolutely not your grandfather's foreclosure. Things have,
no, you're talking California, right?
We're talking about California, absolutely.
California. Okay.
And in particular, the non-judicial foreclosure statute. Yeah. They started amending the laws as a result of COVID. This is the background to allow, because there was an increasing number of foreclosures, they were starting to allow foreclosures really based on status of who's bidding at the sale. They wanted to give owner occupants, people who would either owner occupy a property or who said they would, a priority over what you would call the typical foreclosure buyers. That was a change. We'll talk about that in just a minute, but it's led up to the most recent changes, which are far-reaching changes to the process itself, which make the finality or certainty of any foreclosure sale both a long and more difficult process and suspect even when it's done. So let me go into a little bit of a background. Questions before I start?
Let's see. We're just so you know, we'll be cutting to a break in about a little over a minute. So we'll start to tease the audience with this. We'll ask our trivia question. We'll come back and continue on. But go ahead.
All right, here comes a little tease. All right. So beforehand, if somebody went to a foreclosure sale and they bid, it was an issue of who was the highest bidder. Lenders would foreclose and credit bid the amounts owed on their loan. In some instances, they might overbid if they really wanted the property for any particular purpose. And any third party would come, and if they bid $1 more and they paid the money, they'd own the property. That's long since been abrogated by new laws from what they call SB 1079. And what they did, basically, the legislature allowed 3 classes of preferred creditors to overbid any foreclosing lender, even at the sale, who bid a particular amount. So if you're either a tenant who occupies the property and wants to stand as an owner occupant, if you're a third party who wants to buy the property and says, I'll live in it as an owner occupant, or if you're a nonprofit organization that will encourage lower income or affordable housing, you get to overbid any lender.
Okay. And we're going to get into the more of this in the next segment because we want to dissect all of that. All right. So here is our first trivia question. And again, just as a reminder, Spencer, if you know the answer, don't say anything yet. When we come right back from break, we'll see if you know the answer. Which is the most visited country in the world? And I assume they mean for vacations, tourists, that sort of thing. Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate, which, by the way, is worth about $100. Trivia question number 1 is, which is the most visited country in the world? Again, 888-912-1190. Don't touch that dial. The Best of Investing. I'll be right back. Welcome back to the Best of Investing. I'm Edward Brown, along with my special guest, Spencer Scheer. Our first trivia question, which is the most visited country in the world? Spencer, what do you think the answer is?
I guess I'd say the U.S.
That's what I thought, but it's not the U.S., it's not Spain, and it's not Italy. It's France.
Interesting.
Yeah, I guess people love to go to that Eiffel Tower. All right, so Spencer Scheer, a real estate attorney, is educating us on the newest foreclosure laws, which I guess is new since COVID came, because that SB 1079 has been around for a couple of years now.
Yes.
Okay. So I'm thinking as the borrower who's getting foreclosed on, if I understand it correctly, they're not allowed to bid at the foreclosure sale. Is that correct?
No, they're going to either reinstate the foreclosing lender's loan or pay it off before the sale.
Okay. So it seems to me that what really hampers the borrower, okay, let's put it pre-COVID. Let's say a property's worth $1 million and the borrower's only owed $200,000. And for whatever reason, it goes into foreclosure, and the lender goes ahead and bids their $200,000, and there are a lot of bidders there. They bid it up to $350,000. So what would end up happening if there's no subordinate debt is the lender gets his $200,000, the extra $150 less whatever costs would actually go to the borrower. Correct?
Yes.
Okay.
That's right. It'll go to the borrower. First it goes to any junior lien owners of record or judgment creditors, and you said in your scenario there are none, so yes, it would go to the borrower under that scenario.
Correct. Okay, so now you got this SB 1079, and what ends up happening is no regular bidder that I can see would ever even show up and bid on that property, because if they bid 210,000 or 300,000 or whatever, somebody bids at least as much as they do or over after the fact, and you'll have to tell us the days. I think it's like 45 days or something. If they're a nonprofit or one of those other, the tenant or someone who says, I want to live there, no investor would show up at a foreclosure sale. And what ends up happening is the situation that I could see happening is the lender bids his 200,000, because a typical bank is not going to want the property, so they're just going to bid what they're owed. Nobody's going to overbid. Then the lender gets it, but then within 45 days, one of these nonprofits or the tenant or an owner occupied will then bid $200,000, let's say, and get the property. And the borrower basically took it in the shorts. Whereas in the first scenario I gave, he actually would walk away with $150,000. Basically,
this is great. What you're saying, you're warming up for what happened in the most recent law that went into effect on January 1st of this year. So let's warm up there. Let me finish up a little bit on SB 1079 so that we can get into it, because that's a good point. First, the answer to your question, you'll still get third-party bidders who will go to the sale, because in your scenario, if you're owed 200 and something to pay off the bank, and there's really the potential for 700,000 or 800,000 of equity, you'll always get third-party purchasers there. Whether they can get overbid, you're right, that's an issue. And that's really what the legislature wanted. They wanted to say, instead of having speculators go and buy the property, we want homeowners who will actually live there. Better for the community. That was the theory. So again, just to finish this part off, to lead up to the newer laws, there's a devil in the details, and that is you don't really get finality of sale under this overbid situation that we've been discussing, because you have a sale, and on day one, the day of the foreclosure sale, let's say the lender in your scenario bids 200,000 or so and pays off the bank. These overbidders have 15 days in which to identify themselves as appropriate and say they're going to overbid, and they've got a total of 45 days to make the payment. So this whole, if there is a bidder within 15 days, then you got a 45-day period of uncertainty of whether or not the bidders will actually perform. And then what if the borrower files bankruptcy in the midst of it, then saying that sale really isn't final yet because of these new laws, let me then reorganize in bankruptcy. So there's a lot of issues that come out of it.
So the borrower doesn't have to file bankruptcy just before the foreclosure. He can actually wait till this 15-day or 45-day extra period to file BK.
Again, more dangerous for the borrower, but yes, it's the lifeline still there. And again, in the new legislation, which we'll talk about in a minute, they tried to plug that up, saying no. The effect of the legislation is to say that once one of these bidders actually performs and submits their bid money, the date of the sale is deemed to relate back to the date of the foreclosure sale, theoretically to obviate and wipe out the effect of a bankruptcy. But we'll see how that plays out. So that's SB 1079, a little complexity.
Yeah, but I look at this and I think, how many homeowners who want to live in a house actually show up and bid at a foreclosure? Because for the most part, most homeowners are not going to do that because they generally can't see the property inside. So you're almost always just going to get investors to show up at a foreclosure sale, right?
Yeah, again, my experience, we've got a lot of experience. We see a lot of what this going on boots on the ground. But I would say a lot of nonprofits are bidding, but you're getting more and more owner occupants, whether they're being coerced to do it or informed to do it, or they want to do it, they're doing it.
Yeah, and maybe they'll just say, sure, I'll go ahead and live in it for a period of time. I don't know what the law is, 1 year or whatever, to actually, prove that they used it as their
You've got
occupant.
it. There's other laws too that require that even the deed shows that you're going to be doing that for a certain period of time. So yes, there's some enforcement that goes on.
And get the utilities in their name and there and all that kind of fun stuff. Okay, we're going to cut to our second trivia question here. This is a football question. Who is the only cornerback, not quarterback, but cornerback to win the Super Bowl MVP? So this is a harder question. Call 888-912-1190. First caller with the correct answer wins that tanning certificate. Again, who is the only cornerback to win the Super Bowl MVP? Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. One more time, I'm Edward Brown, your host, along with Spencer Scheer, real estate attorney. And our second trivia question, who is the only cornerback to win the Super Bowl MVP? What do you think, Spencer? It's kind of a hard one.
Offline, I think I gave you my thoughts. They don't sound like they rose to the occasion. So
no, it was Larry Brown, and I think he played for the Cowboys. I know that was a tough one. We had to throw one tough one in there. The next question has to do with food, and I think it's a little bit of an easier question.
Right.
Okay, so the interesting thing about this 1079 law is about the nonprofits. I mean, what kind of nonprofits are? I guess they have to be the nonprofit, like a Habitat for Humanity type of nonprofit. I mean, you can't just have any old nonprofit.
No, you could start the Best of Investing nonprofit right now. Go. As long as you're buying properties at foreclosure sales or they're acquiring them so that you're using them for affordable or low income housing. As long as you can show you're doing that, it's fair game.
I can't rent them out though. I can't do that. I have to actually provide a homeowner with it, right?
I've never dealt with that scenario. I've never delved into that because usually the people I'm dealing with, they are selling them. But it's monitored by the California Attorney General, so it's not a just a total fake out. And I say I do it. You've got to show that you really do.
Yeah, interesting. Okay. Anything else you want to explain? Now, has there been that 1079 has been around for a couple of years? Have there been any changes to that section 1079?
Yeah, there's been a fair amount of changes, and again, a lot of it relates to the actual effect of the sale, like I just said, to be able to cut off a bankruptcy. And that's the primary one I'd say right now is that they attempted to, in the most recent legislation, to say that the sale relates back to the date of the sale if, in fact, the third parties perform. Let's talk about the new legislation because it's far-ranging. I'll never be able to do anything more than just a flyby. But AB 2024 and some other laws came out, completely changed the landscape on foreclosures. It used to be somewhat simple in the sense that you either, if you're a borrower, reinstated your loan within 5 days of the date of the foreclosure sale, or you're required to pay off the loan in full if it wasn't reinstated during that period of time. And again, bankruptcies can stop things. People can get restraining orders. But assuming that was the case, that was pretty much it. And the lender would either gut a sale or the borrower would try and stop it with a bankruptcy. Now they've implemented under the new laws on covered loans, which are 1 through 4 unit properties, right? 1 to 4 unit residential properties. That doesn't have to be necessarily owner occupied. Just 1 through 4 residential properties that if you as the borrower show up before the 5-day reinstatement period and show that you have a property now, your property is listed for sale with a bona fide real estate broker, then the foreclosure trustee has to postpone that sale for 45 days. So
wait a minute. So you just listing it? You don't have to have an offer?
Yes, a licensed broker. Your eyes went real big on that, but absolutely positively. Then, and again, we're running through this very quickly. There is so much detail in this. Then the sale gets continued. And if within 5 days of the next scheduled sale, the borrower comes in showing that there is a listing agreement, not only a listing agreement now, but there is an offer for purchase that's going to close for the purchase of the property, and then what they call quote unquote a bona fide offer, the foreclosure trustee has to postpone for another 45 days. So you got an initial 45-day period if you list it with a bona fide broker. And then if you can show within the requisite time period that you've got an offer for sale, you get another 45 days.
And this is after you do go through the 3-month and 21-day period, right?
Yeah. So it used to be if things were going as fast as they could, you got a 3-month notice of default period, and then as notice of sale period as long as 25 days to cover IRS liens. That used to be the anticipated sale time to actually hold a foreclosure if nothing stopped you. Now a borrower who's smart can add on another 90 days, even if the property will never sell. So that's a critical change in the law. We've already seen a bunch come down.
Effective January 1 of this year, 2025?
That's right.
Wow. I mean, boy, they just really stretch these things out. And it doesn't have to be their own occupant. It doesn't have to be their personal residence. It just has to be a 1 to 4.
1 to 4 unit residential property.
Yeah,
but I was going to say that there's a lot of details in the mechanics of how you're supposed to notify the trustee and what is a bona fide offer and other things. You've got to dig into the details. But assuming that's the case, 90 days could be just chalked on for that.
Gosh, I wonder how many lenders are going to stop writing in California when they just realize that 3 months now turns into an additional 3 months automatically. I mean, you're talking about potentially 6-7 months minimum, and that's it. Nothing else. Okay, let's go to our third trivia question. All right, you ready? This is a food question. Yes. What is the top-selling Blizzard flavor at Dairy Queen? What is the top-selling Blizzard flavor at Dairy Queen? Call 888-912-1190. First caller with correct answer wins that tanning certificate. Stay with us. You are listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Edward Brown here, along with Spencer Scheer. Third trivia question. If you know anything about Dairy Queen, they sell this dessert thing called Blizzard, but you can add stuff to it. So what's the top selling Blizzard flavor at Dairy Queen?
You're asking me. I'm glad I don't do this for a living. I gotta guess vanilla because that's the most popular ice cream. I have no clue.
Well, yeah, it's funny because you're not a big sweet tooth guy like I am. I actually knew this one, Oreo.
Oreo, of course.
Oreo flavor, yeah, of course.
Pretty good. Okay. I can see why.
All right, so let's get in because we only have so much time. Okay, so we talked a lot about 1079. What about interest rates and how you think they're going to affect the real estate market, inflation versus deflation? I think they just saw today that interest rates went back up above 7% for the first time.
Let me hit one more thing on the new laws. It's going to be of value to your listeners. Now, your question is a great one. But what you have to know also on first lien loans on 1 through 4 residential properties, they've also addressed the issue you raised when we first started out on whatever borrowers getting foreclosed out on a $200,000 loan when the property's worth $1 million. And what they're requiring now on these covered loans is that a lender bid a minimum of 67% of the last known value of the property as the opening bid. They've got to certify, meaning the lender, that the bid for the foreclosure is 67% of the last value, which could be an appraisal, a BPO, possibly a Zillow or something like that. And that's got to be the opening bid. And if no one bids 67%, the sales automatically continued at least one time, and then you can, bid as somewhat normal. But your listeners have to know that it's not your mom or pop's foreclosure. These are just two of the main issues.
Okay, so a lot of conservative lenders won't even lend. Let's say the maximum, let's say, is 55%. So property's worth $1 million, and the max loan that they're willing to fund is $550,000. You're telling me that they cannot bid their 550; they have to bid over.
No, I'm saying that they've got to open the bid at 67%. They may take less. They're let's say if their opening bid is $500,000, that's what's owed, and the 67% is 600,000. The trustee's got to open the bid at 600,000. Theoretically, if someone comes in, they'll pay off your client's $500,000, and there's
no, I know, but you're what I heard from you though is that they're, again, property's worth $1 million. They have to open the bid at 670,000. That's 67%.
Doesn't mean they're credit bidding that amount. It means they just the trustee has to open the bid at that 67% amount.
And if someone says, "Well, I'm not willing to pay that, but I'm willing to pay 600,000," they can't do it, right?
They can't accept a bid less than 67.
Okay, so theoretically, Mr. Lender, who's in at 550,000, has to sit there waiting. Nobody bids, because a lot of times people won't bid if it's that close. 67% is a fairly high percentage. So nobody bids, and now what happens? They just stop.
It's automatically continued. But you can see you're echoing what the legislature's intending. They're saying we don't want to let someone get foreclosed out of substantial equity unless there's at least some minimum bid threshold. This was negotiated and fought for. The California legislature is very.
But then what happens? Okay, it gets postponed for what, a month?
No, they have to postpone it at least a week.
And then they go back out at 670,000 again?
And they can go back out and you can bid, whatever the lender can bid for an opening bid. And then again, it could be bid up all the way to amount, including junior lien holders. So
okay. So so really, from a lender standpoint, who's in this case at 550,000, he's only getting delayed a week potentially, because then the next week he would just go ahead and say, "Now just go ahead and no one bid 670 opening bid, so now a week goes by. Now I can go ahead and credit bid my 550."
They could just do their credit bid or the overbid if they want, and then all the other liens are factored in.
I understand that, but I'm thinking as the lender. Okay, so really, the only worst part about that is it just delays me a week.
Yes.
Okay. That's not the worst thing in the world. Okay.
No, not the worst, but I'd say those are two of the primary issues you got to consider. There's many more. Let's go to your next question. I thought that was a good one. Yeah. That is on interest rates, right?
Yes.
So again, I was a deflationary. I was an inflation denier for at least the last few years. I kept thinking they've pumped all this money in the economy. There's no way in the world, as the stimulus recedes, that they're ever going to be able to get it, back to the point it was. And eventually, you'll see higher unemployment, and you'll see values come down, kind of like the way that it did before. But I'm starting to change my mind, and I'll tell you why. And then again, we'll see how it plays out. But like today, for example, the Bank of America just came out and they said on their report, or earnings report, that they're sitting on $112 billion of unrealized bond losses. Kind of like that, Silicon Valley. What was that bank that went to Silicon Valley? Yeah. So in other words, they're holding a bunch of bonds that are like at 0.5% or 0.8% return that are worth way less than what you get for the same bond now. And they're unrealized losses. So what does that mean? It means it's a microcosm of what's going on with this government. You've got, $47 trillion of debt that the federal government is paying interest on.
47 or 37? I think it's 37, but that's okay.
Whatever it is, it's
10 trillion.
Yes, but it's a huge amount. It's as if you were carrying $200,000-$300,000 on your own personal credit card. So if the government lowers the rates, and really so that they can help reduce the deficit, it's got to be a combination of reductions in spending and reduction in interest rates. They could possibly find some way out of that debt. But if they do that, it runs the risk of putting inflation back up, because you'd have more easy money, people getting it easier, coming back in and yakking up the price of assets again. conversely, if inflation does come back, which it seems like it has been recently, and they raise the rates, it's going to raise the federal deficit even more. It's like a no-win situation.
Yeah.
So again, it's causing me to rethink, whether or not inflation is coming back. I think it might, and if it does, I mean, all bets are off for certainly lending as we see it.
Wow, that's crazy. Tell you what, we're going to cut to a break. The next crazy thing we're going to talk about when we come back, we'll have a few minutes, is crypto.
Crypto.
Yeah, crypto. Is it a scam or is it the real deal? Spencer is going to educate us on that. All right, stay with us. You're listening to the Best of Investing. Don't touch that dial. We'll be back with some closing comments and a little talk on crypto. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest, Spencer Scheer. No trivia question this time, but educate us on what do you think about crypto?
This is of interest to me, just generally as in an economic sense, because I thought crypto when it first came out was a scam. I mean, if you look at the history of it, these cyberpunks who created it were looking for an opportunity to fly their currency under the radar, where the government couldn't monitor it and everybody could have their own currency. And that's never going to happen. The sovereigns, the governments, are never going to allow there to be these separate little private currencies. What crypto's become is a bet on whether or not it will become a replacement for other stores of value now. So to have currency, to have a legitimate currency, you've got to have a store of value, you got to have a medium of exchange, and you've got to have a unit of measurements. And meaning, for all those things, that's what a dollar is. You go out, and it's a store of value. You can exchange it anywhere you want. You can buy a pack of gum, or $1 billion. You can buy almost a house now. And it's a unit of measurement. You can see that very easily. Crypto doesn't do that. You can't take your crypto down to the store and buy a Coke. You can't go buy a house with it. You might find some people who want it. But what it's become is an investment mania where people are investing in the concept. So what I've heard recently, which I thought is interesting, is that clearly it looks like digital currency will become ensconced somewhere along the line of this country. China already has it. And Bitcoin, as far as the distributive ledger technology, it is a great unit of it can be absolutely a unit of measurement. You can track everything, and governments can use that technology to track it. But the problem with crypto is that it's not a good medium of exchange. Some people are arguing now that really U.S. Treasury bonds are the medium of exchange in this world now. Since we came off the gold standard, people are pretty much trading dollars now. You buy oil, you got to change it into dollars to get the oil. People are saying maybe we'll substitute Bitcoins, not the marquee name Bitcoin, but some version of that tokens as what gold used to be, and hold that. But it is a whole different idea than you're just going to go out and have Bitcoin, and I'm going to have my Bitcoin, you'll have your dollars.
No, I know. I even though I missed out on the fact that it went from 5,000 to 100,000, I am still not a believer because. Again, I just look at the tulip bulbs of the 1600s. What do you do with these things? These things, they went through the roof in price back in the 1600s.
Yes.
And again, unless you're going to get people, I mean, I guess in some cases people are accepting Bitcoin for, like I think a baseball player accepted Bitcoin in his salary, but that's kind of few and far between.
Well, let me stop for one quick second. El Salvador takes Bitcoin. But again, they're going to have to change their Bitcoin or whatever they call their El Salvadoran dollars into dollars to buy oil. It's still a dollar, and its backings are the essence of what used to be.
Well, I think we should invent one, you and me. It'll be the Scheer Brown coin, right? We'll be the crypto guys. Just I say it's worth $1 million a coin.
You're a humble guy. You put Scheer Brown. I like that.
I did. Well, because Brown Scheer doesn't quite. Scheer Brown sounds better. You always got to go with what sounds better. Hey Spencer, before we forget, since you are quite the expert in real estate law, if people have questions for you, mostly in real estate, I'm sure, rather than crypto, how would they get a hold of you?
You can get a hold of. We're in the offices in Orange County and San Rafael. I had the office up in San Rafael. We're at www.Scheer Law Group, SCHEER, lawgroup.com, and you can find us on the internet along with our house band, Factor 11.
Factor 11. That's right. Okay. All right. So now we're going to go to our thoughts for the day here. So I did some financial planning, and it looks like I can retire at age 97 and live comfortably for about 11 minutes. Not bad, huh?
Truly.
And I hate it when Walmart doesn't have what I need. And I have to go home and change out of my pajamas and take a shower so I can go to Target. Don't you just hate that? All right, audience, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.